let's start with the most basic issue. Is Bitcoin an asset or a currency? Okay, the word cryptocurrency is a very politically charged word because if Bitcoin was a currency, it's in opposition to the US dollar, okay? And if it's an asset, it's in opposition to gold. Okay, so because the first offering came out, the strike was 398, Bitcoin kept moving up, our stock kept moving up. Eventually, that bond was the best performing bond of the entire year. What I'm saying is of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. You know, at some point it was trading insane amounts, like triple, you know, your money on a bond. Okay, so we had good success there, and of course Bitcoin kept moving up, and our stock kept moving up, and we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with $400 million. This time we started with $600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to zero. So we struck it at zero. And, you know, up $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, you know, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it, right? Like every single business on earth that's debt financed presumably is borrowing money to invest in something which is going to return a higher yield than the cost of the debt. I immediately saw the inflation in March and April in the stock market, right? Because my inflation bogey wasn't, if I were to go to all my investors and say, I got $500 million, I'm investing it at 2% interest and inflation rate's 1%, they wouldn't have given me a pat on the back. They would have said, the S&P index is moving up 10% a year. Your hurdle rate, your cost of capital is not 1% or 2%, it's 10%. And maybe you're getting 5% yield on a piece of debt, then I don't know, hold my nose, but you're losing 5% a year. Half-life of the money is 12 years. Okay, fine, but like you shouldn't be holding it. You should be buying your stock back or buying another company with that. Sitting on that cash it doesn't make any sense. Saifedean says the dollar-weighted monetary inflation rate across, you know, all currencies for the last 30 years is 14%. Interesting number he comes up with. 14% is the inflation rate of the currencies. Now, that would be the inflation rate on scarce desirable assets or any portfolio of assets. Additional way you'd value a stock is you would put a risk premium on it. And you would say, well, your cost of capital is the return plus the risk premium. So it used to be we'd think, well, there's a 3% risk premium and the inflation rate then would be 11%. But I think that if you buy the S&P index, you're kind of in theory stripping out the risk because you're buying 500 companies. So the S&P index can be viewed as a proxy for monetary inflation. And the question of inflation is, what's your inflation rate? Well, what do you need to buy? Inflation is a vector, and what I mean is you got to use multi-dimensional arrays and linear algebra to even start n-dimensional linear algebra to even start to deal with the issue. Another way to say it is you can calculate a different inflation rate for any person in any jurisdiction based upon their mix of products, services, and assets they want to acquire. And so common sense says a person that wants to acquire a set of manufactured goods and wants to watch streaming YouTube has a lower inflation rate than someone that wants to buy Picassos. Now, what if you want to be rich? If you want to be rich, your inflation rate is very high. because you have to acquire assets. If you want to be middle class, your inflation rate is different. So back to why I did what I did. If you're the CEO of a publicly traded company, your inflation rate is the cost of capital. And the cost of capital, because your shareholders hold you to that cost of capital. Different investors have different indexes. If you go back to the strategy, if you're a fixed income investor, you've got like a sovereign, or corporate fixed income rate. You've got the junk bond index, you've got the corporate, investment grade index, you've got the sovereign debt index. You have capital structures in the world that have different indexes. Someone that wants to send their kids to an Ivy League school and wants to have a house in the Hamptons, right? They have a different index. Now, in the last 12 months, the S&P is up 34%. If you're sitting on $100 billion worth of cash and you put it in the S&P index, you got $34 billion back. You have $134 billion right now. If you held it in conventional treasuries, you're short $34 billion. I've literally had bankers from the big wirehouses, they came to me when I'm sitting on 100 million or 200 million in cash, and they go, we can get you into one of our money market funds that'll yield 22 basis points, and that's much better than the 9 basis points. And they're selling this to me. There are people in suits that make a lot of money, and they're selling it to me. And you read the prospectus, and the prospectus is they're going to do something, and they're going to charge you a 27 basis point fee to generate 22 basis point yield to you. You're giving 60% of the yield to someone in a suit that's giving you a service to get you 5 basis points more. But there are people that convince themselves that this is a good idea, right? And we come back to that in a second. It's an important truism in the market. Why is it that everybody hasn't bought Bitcoin? People ask that, right? All the Bitcoiners wonder, why don't all these investors buy Bitcoin? And the answer is because there's trillions of dollars of capital locked up in capital structures that are chasing a different index. Right? There's trillions of dollars of money sitting with people that think that inflation is CPI. There's trillions of dollars sitting in real estate funds, and they're trying to beat CPI. If I got rents and I'm raising them at the CPI rate and I'm happy with it, there's trillions of dollars invested in fixed income funds where they have to beat the junk bond index or beat the corporate index or beat the sovereign index. And if they beat the sovereign index, if I have $20 billion and all I got to do is beat, the junk bond index or I get paid, then I'm getting paid to invest $20 billion to get 50 basis points more. Let's start with the most basic issue. Is Bitcoin an asset or a currency? Okay, the word cryptocurrency is a very politically charged word because if Bitcoin was a currency, it's in opposition to the US dollar, okay? And if it's an asset, it's in opposition to gold. Okay, so just resolving the fact it's a digital asset, not a digital currency. Most people, how many public speakers, how many well-regarded investors have made negative comments about Bitcoin over the past 12 months because they mistakenly think it's a currency and they think they're sticking up for the dollar, right? Many. Like, I prefer the dollar. So if you understand it's a digital asset, a scarce store of value, speculative digital asset, that's how politically correct people would refer to it, right? And anybody else would say it's just a digital asset or a store of value asset. The first impediment is just understanding that and educating the market that it's a digital asset. I think the second impediment is getting over the issue of is it a threat to the powers that be and will it be banned? We're not going to ban Bitcoin. It's going to be around here. So those two checkboxes are huge. I think the third checkbox is, can I actually buy it via my existing bank? Every publicly traded company has been doing business with probably the same bank for 30 years. If I could buy this directly through Bank of America or JP Morgan or Citigroup, et cetera, I think that makes a big difference. If I have to go to an institutional grade Bitcoin exchange, that's a 1-year exercise in due diligence. right?
There's friction to doing it.
There's two issues, right? One is before you give $1 billion to a counterparty, you have to inspect their accountants, their legal teams, their licensing, their executive team. Would you give $1 billion to a private company that's new, right? It's like, that's a huge hurdle. And the second is they're not FDIC insured, right? They're not, the imprimatur being backed by the U.S. government means that, in any liquidity crisis, the Federal Reserve gives you $10 billion or $100 billion. How much money did you need, right? One thing that's already happening, right, is the regulatory clarity that's coming. The more clarity, if the regulators move forward and they clarify the treatment of stable coins and security tokens and DeFi exchanges, I feel like the connection of Bitcoin to crypto has been holding it back, right? Because stablecoin regulation is unclear. Many cryptos are security tokens. That's holding us back. The exchanges that are trading Bitcoin while they're trading security tokens, right? The connection of Bitcoin to SHIB or Dogecoin, right? This holds back a public entity from wanting to get into that space. I mean, in fact, it's really the express concern that the SEC has, right? And they're concerned probably about what's Bitcoin volatility coming from? It's coming from the cross-collateralization of crypto markets with high leverage, trading at off hours, right, against thin liquidity pools of other security tokens. It's going to decrease volatility, and it's going to increase confidence of large public investors and large public companies. That'll be part. I think if we get clarity from FASB or any kind of improvement in the accounting situation, that's a plus. And there's a groundswell of interest, right? There were 515 letters sent to FASB on this subject, and there was a lot of commentary from regulators, from we've got congressmen, we've got senators, we've got auditors, we've got big institutional investors, we've got big publicly traded companies, and they're all opining on the issue. So, and I have yet to see I haven't seen any articulation by anyone suggesting that the current accounting treatment is beneficial. Our dream was one day big banks may actually own Bitcoin, what if all the big banks own Bitcoin? But now I think we've flipped to another observation, and this is an interesting one. In that stablecoin working group paper that was released last week, not only did they say it's okay for FDIC-approved banks to hold stablecoins, they actually said it's required to be an FDIC-insured bank to hold a stablecoin. Okay, so we're actually growing up as a crypto industry. We're going from unlicensed, non-institutional grade corporations that are primarily entrepreneurial and fast-moving to licensed, institutional, regulated entities. And if you look at that, it's an invitation, like it's a green light to every single bank in the world